It's a beautiful morning here in Los Angeles. My name is Gene Grant. I'm the CEO and founder of VRBex. VRBex is a cryptocurrency and security token exchange. So our goal is to provide end-to-end transactional capabilities for customers who want to participate in the cryptocurrency space. So imagine the consumer life cycle. From the time that somebody decides to invest in cryptocurrency, so taking the fiat, converting it to crypto, perhaps then trading cryptocurrency, moving along to an investment in a security token, all along with safe custody and all the reporting necessary to ensure that your transactions are reported both monthly for your own personal record keeping and for IRS reporting at the end of the year. The idea is to ensure that customers, both at the institutional level and at the retail level, have a safe, trusted experience they would expect from financial services firms. So, our products and services, I'm not going to go over with them here. You can find all this information on our website. So I actually want to talk to you guys today as if I was talking to you on a one-on-one discussion. You're an institutional investor coming up and asking me, why would I want to invest in VRBex? The big reason is for any investment should be, what is your return going to look like? So cryptocurrency exchanges today globally are generating between $7 and $10 billion. That's 7 and 10 with a B. There are roughly 20 major players in this space globally. In the United States, they're virtually all in the top 10. There's 5 participants in the United States. So a cryptocurrency firm that was managed to capture just 5% of today's market will generate revenues of approximately $350 to $500 million per year. Our 2 major sources of revenue will be the cryptocurrency trading platform and the security token. Cryptocurrencies are a small subset of the current population of things that we think of. In the United States, we know that the CFTC has defined that the Bitcoin is a cryptocurrency, perhaps some of the Bitcoin forks, and it's unclear about anything else. Clearly, the growth area is going to be in security tokens. On the security token trading platform, we expect that to be the area of biggest growth in the future. However, we need to be realistic about the amount of security tokens that are available for trade in the next 12 to 18 months. The realistic answer is it's not going to be much trading activity there. The reason for that is if you do a Reg D offering in the United States, it's a 12-month lockup by regulation. Hence, we need to be realistic that if things are issued today, we're not going to see much activity for at least 12 to 18 months. So our business plan is predicated not on security tokens, but again, on that end-to-end experience, including safe custody and reporting for customers within this space. One of the biggest differentials that we're going to talk about for our firm is that customer experience, end-to-end customer experience, and the way that we built building our platform is to ensure that there is that kind of safety, well-managed, well-run institution that you expect within the traditional financial services space. Talking about the life cycle, I just wanted to talk a little bit about our team and about what makes VRBex different. So our team, there are 7 of us founders. We're from the traditional financial services space. We have a total of 209 years of experience, 179 years within financial services. The only member of our founding team that isn't from financial services recently retired as a deputy director of the Central Intelligence Agency. We're all late career professionals who have reputations at stake, and we wouldn't do anything to risk our reputations, so we're building this exchange from a regulatory compliant perspective. Personally, I spent 28 years in investment banking. I'm a registered principal with FINRA, so that's the Series 24. I also was originally, a long time ago, a commodity pool operator and an NFA member. My co-founder, David Powell, is formerly the head of corporate investment banking USA for BBVA Compass, the 31st largest bank in the United States. And prior to that, he was on the management committee and head of corporate investment banking for BBVA Bancomer, the largest bank in Mexico. So we have considerable experience on the bench working within the highly regulated financial services space, and we understand what it means to act in a fiduciary capacity for people who want to participate in financial services. And this is a pretty big differential, because if we look at the existing platforms out there today, without exception, they were built by people from the technology world who then built a platform and thought they could extend that platform into financial services. A lifetime of experience has taught us that you need to build the business first, and you put the platform on top of the business. So within financial services, it's not something that you learn as you go. It's something that you deal and expect financial professionals to have in place. Imagine today, let's just think about our own experiences with financial services. If we couldn't, for some reason, get access to our funds for 1 day or 2 days, like Kraken did when they did an update on their platform, we would expect to be lining up to take our money out of that bank and we'd never deal with them again. But in the cryptocurrency world, not only do we accept that, but 6 months later, Kraken is back being one of the largest exchanges in the world. Makes no sense to me. If we look offshore, and we look at some of the largest offshore exchanges in the world, it's hard to ascertain who's running those exchanges, what country are they regulated in, how much capital they have, and what protections are available for the people who put their money in those exchanges. In the United States, we have a well-regulated system of financial services, and it is the expectation that the company founders and the management are going to be transparent, they're going to run it well, and they're going to be responsive to the people who not only invest in the company, but put their assets in the institution. I want to talk a little bit about the VRBex investment opportunity. We are not a tech play. We are a play that is based on your belief as an investor in the future of the cryptocurrency and security target markets. If you believe that, like we do, that this market is viable and will continue to grow, then we are the infrastructure play that is going to be supporting that and allow participation in the continued growth of that market. Our management team has the skills and experience to deliver. We've been working in financial services for all our careers, and most of us have built businesses within banking. So just talking a little bit about our security token offering. It's a little different than other security tokens you might have heard, and it's very different from an ICO. Our security token is vanilla Delaware preferred stock, preferred equity, actual ownership in the company. It pays a quarterly dividend. The quarterly dividend is nice and simple, 15% of gross operating revenue, 15% of the top line. Nice and easy to understand. There's also something called a liquidation preference. In the event, heaven forbid, something happens to the company and we are liquidating the company, the preferred shareholders get their money first. There's no value transfer to the common shareholders. Preferred shareholders get their money back. Very important, traditional investment. The third is something called drag-along rights. In the event that there's a change of control, for example, our company's acquired, then the token holders participate in that upside in that their tokens are purchased for market price. Again, 100% alignment between the common shareholders and the token holders, or security token holders investing with us. We're aligned in 1-for-1. We do have a little other benefit for our token holders. Of course, there'll be discounts on the exchange depending on your level of participation in the security token offering. But the play here is very simple. If you believe in the future of the cryptocurrency universe and you believe that trading is going to continue, we are the least risky in a sea of risky assets because you're not betting on a single technology, you're betting on the future of the industry. And I'd like to talk a little bit about comparables because everybody wants to know about comparables. What are you worth? What could you be worth? We can look out in the industry and we can look at revenue. In the United States, Coinbase has recently reported some revenue numbers for 2017. They made $1 billion with a B in top line revenue in 2017, a big number. The Japanese exchange CoinCheck, you may remember them from the nice little hack that they had. They reported top line revenue, actually they reported profit, sorry, bottom line profit, 10 months, $490 million. So the revenue numbers from exchanges, even if they're not well run and well managed, are still spectacular. We expect over time to see margin compression, which is why we're looking for the security token market to increase and over time to be a greater source of revenue. We're raising a total of $100 million. Always sounds like a big number to people who are not from the banking world, but part of our plan is to work very closely with the banking regulators, and we may in fact look to acquire a banking charter. The thing about VRBex is that we're looking at multiple regulatory regimes but a single user experience. So cryptocurrency trading in the United States is covered by the banking regulations, so FinCEN and local state banking regulators, and then the security token market is covered by the SEC and FINRA. So our goal is to make it transparent to the user what regulator they're being covered by so that they are free to invest where they want to invest when we take care of that. The number of tokens is set on $135 million. Sorry, 135 million tokens cannot be increased. So our raise is fixed. The pre-sale actually went live last Monday, so we are 9 days into the pre-sale. There is a discount scale for people who want to invest early. The minimum investment is $50,000. VRBex is found on www.verbex.com, and the investment site is verbex.io. Again, my name is Gene Grant. I'm the Chief Executive. I'm here with my colleague Hal Hoodwin and our Chief Operating Officer, David Powell. We are out in the main area with a booth. Happy to answer any questions and talk at length. I don't know if I have any. Sure, good question. So if you go online, you can read our 5-pager and our what I call our white book. It's not really a white paper because it's around 90-something pages and includes a detailed plan in terms of our development. Our Chief Technology Officer actually started full-time yesterday, which is a pretty big deal for us, Chuck. Chuck spent 35 years on Wall Street, and he's currently a member of the CFTC Committee on Blockchain. Chuck assures me that his team will have the beta up and running in the summer. We're looking for a Q3 soft launch, Q4 hard launch of the cryptocurrency exchange. And the security token exchange, we're not planning to launch until Q1 2019 for 2 big reasons. First, it's a little bit of a regulatory lag as we get the broker-dealer up and running. And the second one is we have a responsibility to you, if you become one of our shareholders, to generate the maximum return for you. Given that there's no trading expected in security tokens within the next 12 months, we're going to put our efforts into cryptocurrency exchange first, get that up and running, and then move our constrained resources over to the security token exchange.
My second question was, what do you think the gross margins will be?
So in the exchange world, the gross margins can be fairly large once you scale up. It is not the marginal cost on additional revenue is small, but the upfront costs are rather large. So I'm happy to talk to you on our scale-up strategy. If you want to come over to the booth, we can talk about the minimum startup cost, minimum operating costs, and then what happens to the operating margins as we continue. We have a detailed 3-year plan, because in the event that we decide to go for a banking charter, which is one of the alternatives that we have in mind, the banking regulators require 3 years of operating revenue upfront, sorry, operating expenses upfront as capital in order to get a charter. The reason for the $100 million raise is not that we require necessarily $100 million in development expenses. It's to provide that necessary capital to be a well-capitalized financial institution under the banking rules. Are there any other questions? Okay, great. Thank you very much, everybody. My name is Gene Grant. VRBex is the name of the company. We are on the display floor and happy to answer any questions about the investment, the future of the security token industry, or regulation in general. Thank you, everyone.